We also look at hog markets this week with Iowa State Extension livestock economist Schulz. The USDA's quarterly hogs and pigs report released at the end of September showed a U.S. inventory of 70.9 million head. That was up 2% from the previous year and the highest on record. This is not fortunate news for producers in a market that has tracked downward since early summer. In fact, Bloomberg said this week lean hog futures were the worst commodity performer last quarter, with the December contract falling 32%. We talked with Lee Tuesday morning and started by asking, how bad have prices become?
We've really looked since mid-year. We've seen almost week over week prices decline. I think we're really reacting to the realization that pigs on the ground are a little bit larger than maybe some inventory counts previously. We've seen some very large slaughter over the last several weeks. And really that's what's being priced into these market prices. Also, I think the demand situation is still very important. I think prices could be much lower given the slaughter levels we've seen, but demand has been very stable. When we look at domestic demand, export demand, we're about even at looking previous year ago levels, but really when we look at China and Hong Kong have really helped support the export levels we've had to date. I think as we look forward, I think exports will become a little bit more important here, especially from a volume standpoint. We've seen some very low levels in late 2015, so I think we'll start to see those export levels pick up. We're going to see a lot more product available as we get into the fourth quarter here, and that should help support a little bit these market prices. But really, we're looking at these prices reacting to these slaughter levels that we are seeing.
What did the latest inventory report really show you?
Well, I think before you even look at the new numbers, I think it's important to look at the revisions that USDA did make, and they've made significant revisions over the last couple of reports. We've added significant numbers, and really that was just because we've seen larger slaughter levels than we would have expected given those numbers. So when you look at expectations going into this report, we've really changed the base because of those revisions. But when we look at the numbers, all really pretty much above pre-report expectations. We looked at record levels when we look at the all hogs and pig inventory. We look at record levels when we look at the market hog inventory, and even the breeding hog inventory. While it was only up about 0.5%, we're really looking at levels as high as about 2008, that level of the breeding herd.
How concerned are you about slaughter capacity as we go later into fall, into early winter?
Well, it still very much remains a concern. I think when you look at that slaughter capacity that we have, it is a little bit of a fluid level because we can slaughter a few more on Saturday, and we could see those hogs and the slaughter runs of those hogs really be dictated by what weights are. So if you look at the current situation, the last 2 weeks we've seen slaughter up about 8% year over year and about 7.4% year over year. Now that suggests that maybe some producers have pulled some of those hogs forward and going after some of the higher prices compared to as we get into October and November. But we also got to look at the weight situation. Weights are about where they were last year. We've seen weight increases since August. So I think really October is going to really paint that picture a bit more clear if producers have in fact pulled some of those hogs forward, and maybe we do see slaughter tick down a bit. When we look at the hog and pigs report, I think we're looking at slaughter levels in the fourth quarter about 4% higher than we've seen year-ago levels. We did see at least a week or two really pressure above that slaughter capacity. So I think we're going to talk about that as a major concern as we go throughout these next several weeks.
How low are prices for weaned and feeder pigs right now?
Well, when you look at in the context of recent history, they are historically low. Really, when you look at that weaned pig or that feeder pig market, there is some seasonality in that market. It starts to decline early in the year, and then by summer to late summer, it kind of hits its seasonal low. Well, really this year we've just continued that low, and those prices are low for maybe not the reason we always think of. When you look at corn prices, a lot of times dictate what those weaned pigs prices are, because that's what it's going to cost to feed those pigs up to market weight. Now we're looking at the lean hog price and the optimism for profits when we look 130 to 170 days in the future, and those profits aren't looking very good at all. And so we're looking at opportunistic finishers have really shunned those pigs, and we've seen those prices of wean pigs right in the range of about $15 per head, and feeder pigs, 40-pound basis, right around that $23 to $24 price per head. So very low when we compare to recent history.
Well, let's talk about margins here, Lee, and I'll ask you a broad question about how negative they are right now and kind of what you see them doing for the rest of 2016 into 2017 based on what you think market prices are going to do.
So if we look at market prices, and I think it's important to put those in a bit of context. When you're doing some of this forecast, a lot of this is based on historical levels, historical prices, and we're seeing historically high inventory levels, historically high slaughter numbers. So it's making forecasting more difficult in that context. If we look at moving forward, I think fourth quarter prices are right in that $44 range. If we get into the first quarter of 2017, right in that 49. Third quarter, we're looking in the 60 to 62. Third quarter in that $65 range, and then taking a step back to about 56 in the fourth quarter of 2017. What that equates to for margins right now is in the fourth quarter, we're seeing about $34 losses on a cash market basis. For the year, that gives us a loss of about $3 in 2016, and most of that is almost all driven by the loss we've seen here in the fourth quarter. Then we get into the first quarter of 2017, I think that's right around that $24 loss. The second and third quarter, we're right in that break-even levels, maybe a tick higher, especially in that third quarter. And then the fourth quarter, we're about $15 losses right now per projections. So that gives us about a $9 loss in 2017.
U.S. pork exports in August were more than 11% higher than August 2015. Compared to a year ago, the U.S. shipped more pork to each of its top 5 buyers, including a 23% increase to Japan and a 27% jump to China.